Ladies and gentlemen, good day and welcome to Sathlokhar Synergy ENC Global Limited H1FY26 earnings conference call hosted by Kirin Advisors Private Limited. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth. Thank you and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Sathlokhar Synergy ENC Global Limited. From the management team, we have Mr. G. Thiagu, Promoter, Chairman, Managing Director, and CEO. With that, now I hand over the call to Mr. G. Thiagu. Over to you, sir.
Happy morning, everyone, and thank you for joining our H1FY26 conference call. I am G. Thiagu, Chairman, MD, and CEO of Sathlokhar Synergy ENC Global Limited. Let me begin with a brief introduction. We are a Chennai-based EPC turnkey construction company established in year 2013. From design and civil works to PEB structures, MEP systems, solar installation, interior fit-outs, we cover full life cycle in industrial, commercial, institutional, warehousing, integrated building management system, utilities, solar, and healthcare sectors. Our in-house design team and pan-India delivery capabilities enable us to take a large-scale projects with speed, quality, and precision. In H1 FY26, we delivered revenue of INR 250.21 crore, recorded EBITDA of INR 38.99 crore, and PAT of INR 27.98 crore. Earnings per share stood at rupees 11.59. Our EBITDA margin was 15.58% and PAT margin was 11.18%. On a year-on-year basis, revenue grew by 75.58% and EBITDA rose by 70.13%. Importantly, we enter H2 with a heavier business load than H1, offering strong revenue visibility and execution momentum. Turning into industry trends, the industrial and warehousing leasing market in India surged ahead in H1 2025 with approximately 32.1 million square foot of new commitments supporting fast-track PEB work. Battery energy storage systems are gaining traction with the government raising targets to 13,200 megawatts under viability gap funding and actions revealing more competitive tariffs, signaling faster rollouts. Data center construction momentum remains robust, driven by cloud, AI and hyperscale demand, all of which align well with our turnkey fast-track construction model. Private sector capital expenditure intentions have improved, with commentary from the Reserve Bank of India suggesting a potential rise near 21.5% in FY26, providing a strong backdrop for our offerings. On the order front, we continue to build momentum. We booked about INR 830 crore of contracts. Some of the important orders secured in H1 FY26 include INR 338.36 crore civil and PEB works order for a beverage manufacturing facility in Andhra Pradesh from Reliance Consumer Products Limited, rupees 219.22 crore assignment for civil PEB, MEP and solar works in Karnataka from Kirin Beverage Can Private Limited, and INR 174.45 crore multi-bidding program in Tamil Nadu for High Glory Footwear India Private Limited of the Pouch and Group, Taiwan-based group of companies. Apart from this, we won further number of orders totaling approximately 97.97 crore from clients in sectors such as chemicals, auto components, and other various industrial manufacturing industries. From a credit and capital standpoint, we were pleased to see an upgrade from India Ratings and Research in July 2025, when our large term rating moved to IND in BBB plus with a stable outlook, and our short term rating into IND A2. In September 2025, the board approved a preferential issue of INR 114 crore, including 95.53 crore via equity shares and 18.08 crore via fully convertible warrants, both at 482 rupees per share. This enhances our liquidity and supports working capital and scaling requirements. As of now, we are executing 34 projects, and our current order book stands at INR 1,367.71 crore, giving us roughly 5 to 9 months of execution visibility. Our bid pipeline remains strong at about 13,000 637 crore, supported by opportunities across industrial, commercial, infrastructure segments. Over the past few years, our bid-to-bid order conversion rate has averaged between 12 to 15%, reflecting the competitive strength of our proposals and the confidence clients place in our delivery capabilities. Together, these factors provide a healthy visibility for growth in coming quarters. We have started S2 on a strong note, securing approximately 190 crore of new orders in October. This includes our first international order of INR 35.59 crore from Ceylon Beverage International Private Limited, located in Sri Lanka, in conjunction with Ceylon Beverage Can Private Limited. This milestone marks Sathlokhar synergies into international market and further strengthens our partnership with Ceylon Beverage Can Private Limited, from whom we have already executed 20 factory projects in Mysore and Pune. Looking ahead, we remain focused on deepening our presence across southern and western India while scaling up our work in industrial, commercial, institutional, and healthcare infrastructure. We are expanding our solar EPC and energy efficient design capabilities and investing in digital tools as site automation to deliver quality, speed, and cost efficiency. On the manufacturing side, we are planning to establish a dedicated PEB production facility aimed at significantly enhancing our monthly capability and capacity and strengthening and shortening delivery times and strengthening our business and aligning with our order pipeline and growth and outlook. It has been a transformative first half of FY26 from Sathlokhar synergies. The period was marked by strong orders inflows, marquee client additions, improved credit standing, and the milestone of being 1 year listed. With solid execution discipline, a diverse skill set, and a committed team, we are well placed to deliver sustainable growth while maintaining operational excellence. I would like to extend my sincere appreciation to our all stakeholders, clients, partners, and employees for the continued trust, prayers, wishes, and support. Thank you for taking the time to join us today. I now invite your questions. Sir, happy day.
Just a moment, sir.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Bheda from Bheda Family Office. Please go ahead.
Yeah, good morning, sir.
Happy morning, sir.
Congratulations for a good set of numbers. Sir,
thank you so much. Yeah.
What would be the breakup of turnover in H1 and H2? I believe H2 is much better than H1. So
yeah.
If you can, provide the guidance of how H2 is panning out, and in general, what can be the breakup of H1 and H2 in total turnover?
Sir, our guidance in the past also, like when we look at fourth quarter of every year would be around 58%, and the overall first half and the third quarter put together 45%. With that model, our business model in such a way that we are expected, apart from H1, our guidance would be around 750. So put together by 31st March 2026, our guidance would be around 1,000 plus crores.
1,000 and?
1,000 plus.
1,000 plus for the entire FY26.
For the whole financial year, yeah, FY26.
And if you can throw some light on the margin.
Sir, as of now, we are trying to sustain with the, we are working towards to sustain 11%. We are working towards that.
11% PAT margin or EBITDA margin?
PAT margin.
Oh, great. And sir, what do you do to diversify your client base? What are the strategies which are in place or you will put in the place to diversify the client base in geographically also and in the segments also?
Sir, as we have briefed, like as of now, the order book, apart from Sri Lanka, the other country, project. At this juncture, 40% of the orders we booked from Tamil Nadu, 40% from Andhra, and 20% from Maharashtra. But we are also trying to work with other states, and based on our advertisements and good solid lined up projects are there, and as we are already bidded 13,000 plus crores worth of various offers submitted to various states. So we are pretty strong in expanding our business across India, and also since we already stepped into Sri Lanka market, I'm sure we are pretty confident that we will grow further.
And what is the order book as of now?
In total, 1,300 exactly.
And pipeline, order pipeline, if you can.
So the total order book for the whole financial year, 1367.61 crores to build, to overall to complete, and our bidded offers are 13,637 crores.
Great, sir. Great. Thank you very much. And again, congratulations to the entire team of Sathlokhar and all the.
Thanks a lot, sir. Thank you so much.
Thank you. The next question is from the line of Suman Kumar, an individual investor. Please go ahead.
Hi, Mr. Tiago. Very good morning to you.
Happy morning, sir. Happy morning, sir. Yeah.
Yes, congratulations on a great set of numbers.
Thank you, sir.
There is something on that I was looking at the balance sheet. So yeah. I see there is a current asset which is around 106 crores. And in the footnote, what you have written is it is unbilled revenue.
Yeah.
Right. There is already another entry which is inventory at around 86-87 crores. Right. So how are the two different? The inventory and the what do you mean by unbilled revenue when you say that?
Yes. Yeah.
Hello. Good morning, Mr.
Our auditor is with us. Yeah.
I'm Hitesh from the Hitachi Auditors team.
Hi, Hitesh.
Yes, sir. So the company is currently in the process of completing this preferential allotment, sir, in the forthcoming quarter. So the paid-up capital is exceeding the threshold limit, and the company is bound to do the main board compliances. So the company is in the forthcoming quarter, the Ind AS convergence will happen. So based on that, this first half H1, the revenue recognition is made in accordance with Ind AS 115. So wherever the contract obligations have been delivered, and only sending of invoices are pending, so that portion has been recognized as unbilled revenue for this H1.
No, I didn't clearly understand. So maybe because your voice is not very clear. So are you saying that these projects have already been delivered and you have not raised bill for that?
Sir, just to give you clarity,
as of the reporting date, whatever contract obligations are there that are delivered to the client, and the raising of invoice alone is pending. So that to that extent, in unbilled revenue is recognized for this H1.
So are you saying that this 106 crore would,
yes.
In a way, it is already a work which has already happened, and you are
yes.
So it would immediately, hypothetically, the bill will by now the bill would have already been raised. Is that what you're saying?
Yeah, they are in the process of raising the invoice. Already some portion of invoice have been raised. In another couple of weeks, other invoices will also be raised.
Fair enough. And how is it different from your work in progress or inventory that you are already showing the balance sheet or cash flow?
If you see that there will not be any impact on the cash flows, because it is an unbilled revenue, so there will not be any impact on the cash flows. And with regard to work in progress is where you have not completed any milestone, but here the difference is you have completed the milestone. So only when we complete the contract milestone as on the reporting date, we will be eligible to recognize that unbilled revenue.
Just to give you brief, sir, like example, in our, I would like to take one particular site for as a case study to explain you better way. Like example, we started the Kurnool project. The total value of the project is around 360 crore before GST.
Yes, sir.
Okay. Once it is one of the Asia's second largest beverage industry in India, that is under construction by Sathlokhar at Kurnool, Andhra Pradesh now. And that particular project, the 360 crore worth of project, until we come to up to split beam level, meaning say 10% of 360 is 36, 20% is understand 72 crore, 30% is 120. So unless we attain the milestone, the project is, our investment is been already done, work is done, everything is taken into a liability, and only thing is that we have to write certification in process, and we have to move forward with the receipt of payment. So that's the kind of, since we are proceeding above paid up capital exceeding 25 crore, and we are now in the process of preferential allotment, we will be entering into main board compliances. That's the reason we have mentioned.
Okay. Fair enough, sir. And great work on improving the cash flow from operations. I think that is what you have been talking about in the past, and I see a great improvement on that. So wonderful work. I think if we are able to sustain the momentum and deliver on 1,000 crore plus kind of revenue plan that you are giving, I think we are very good to go.
Yes, sir. Yes, sir. Thank you. Thank you so much.
Thank you, Mr. Tiago. Yeah.
Thank you.
Thank you. The next question is from the line of Dikshit Doshi from Weinstone Financial Advisor Private Limited. Please go ahead.
Yeah, thanks for the opportunity. So thanks for the clarity on trade receivables and revenue from unbilled revenue. There is one more line item of short-term loans and advances, which was hardly 6 crore and moved to 40 crore. If you can elaborate what this contains.
Sir, can you again repeat? Your voice is cracking, but if you don't mind, can you please repeat the question?
Yeah, so under the head current asset, there is one more item, short-term loans and advances. This was around 6.6 crore. This has moved to 40 crore. So which is the main item under this?
GST and advances received.
GST? Can you explain? Yeah, please. Yeah.
Over to Mr. Vignesh. Sir, the short-term loans and advances consist of two major items. One is the GST input tax credit, which is available, and the second major factor is the advances which is paid to our suppliers. So these two are the major components as far as the short-term loans and advances are concerned.
Okay. And so if I see your revenue, so obviously your revenue is around 250 crore this quarter, this H1. Now 80 crore is the receivable, and let's say if I include the 106 crore of bill yet to be received, then all put together the receivable is almost like 186 crore. So since 106 crore is not yet billed, does this mean that most of the revenue has happened at the later half of the H1?
Right, sir. Right. It is actually in the in the later half of the H1, and the receivables are also received to the tune of 30 crores plus. So the current receivable would be around 50 plus crores, sir, inclusive of the retention value. So, as I said,
current receivable would be 50 crore. And how much would be the retention money?
Retention money would be somewhere around 35 crores, sir.
30 crore. Okay.
Yes.
Okay. And one more question. This quarter, this H1, our short-term borrowing has gone up to 36-37 crore. Now we have received the fund from fundraise as well. So this loan will remain, or do you feel that this will again come back? Again come back to more or less zero debt?
Okay. So the short-term borrowings is it's mostly the bank funding which we have availed in the past. So as you said, close to 37 crores. So that is the major part of it is the bank funding, sir, which we have availed.
Yeah, I understood that, but what I'm asking is, now we have already done 115 crore of fundraising as well. So will this debt again come back to zero, or the debt will also remain?
It will come back to zero, hopefully.
Okay. And my last question is regarding the order book. So it was very healthy order win in the H1 of 830 crores. But just wanted to understand one thing, that most of these orders, major part of this 830 crore order was received in April, May itself. Of lately, last 3-4 months, we haven't received any major orders. Most of the order wins recently are 15, 20, 30 crore. So how do you see the, major order wins in the H1? And also if you can, just help us understand this 13,000 crore of bid pipeline is basically where you have done the bidding. So over, let's say, every month, out of this 13,000 crore, how much of the tenders are going to get opened? If you can help understand that.
Sir, just to give you brief, like as of now, the order book is 1,367, and we already submitted worth of 13,637 crore. But the biggest challenge now, whoever is coming to award, the clients are expecting us to complete the project within 6 to 7 months. So we have to be little careful when we commit to book the new order. So the plan is, as of now, the order book has to be ensured before 31st March to honor our commitments to all stakeholders, and also to book, including our clients, to hand over the buildings on time. And we are proactively as well as planning to book the orders in such a way that it has to meet out the next year business cycle scale. That's the reason we are very carefully working and choosing and also negotiating with the clients. Instead of saying no, we are careful to handle our clients based on the commitment, because the people who are all the clients are expecting us to complete the project within 6 to 7 months, and including now that Reliance or even Mr. Muthiah Muralidharan or even Vishnu Chemicals or everybody wanted to construct the buildings in 6 to 7 months time, not even giving time to up to 1 year. So as of now, the entire India manufacturing sectors are pretty fast in action, and wherein they order the machine and then only starting the commencement of construction. So we have to scale up and meet out their expected target. So we are carefully working with our clients in order to book the next year commitments, and we are working towards that, sir. Absolutely fine to book the next year commitment. In case if I book another 1,000 plus crores worth of orders, I have to deliver it at least within 6 months, 7 months time, wherein the current ongoing projects are to be honored, and we should look at in such a way that we have to book the next year commitment orders in an appropriate time.
Okay. And just to understand, let's say currently our order book is 1367 crore. Now, as per what you're targeting, 1,000 crore top line this year, means H2 revenue should be upwards of 750 crore. So if we execute 750 crore out of this 1350 crore, we'll remain with 600 crore of orders still pending. And whatever fresh order wins we will receive in H2. So at the end of FY26, what kind of outstanding order book we are targeting, which will be executed?
Sir, to give you clarity, on 31st March 2025 and 1st April 2025, our carry forward order was 500 plus crores were there when we begin with the financial year. From there, we have proceeded with the blessings of God. Now we have achieved 250 plus crores in H1, and the balance 250 plus newly order book of 800 plus is carry forward now. In totality, out of 1367, already H1 is completed 250. The balance is around 1,000. Out of 1,000, around 750 is expected to be built in H2 in totality. So before 31st March, our guidance would be 1,000 plus, and hopefully around 300 plus would be our 250 or we don't know exactly 150 to 200 crores worth of order would be carried forward to next financial year.
Okay. So I am just asking you, just to understand, let's say this year if we do 1,000 crore top line, what kind of growth we can do next year? Because there the clarity is right now not too much, since we did have a bid pipeline, but orders are not in hand right now. That's it.
No, sir. Actually, on 1st April, the way in which we had been executed for 500 plus crore worth of orders on 1st April 2025, and H1 was completed with 50% of the commitment from 1st April 2025. Out of 500, we achieved 250. Similarly, on 31st March 2026, we would be having at least 750 to 1,000 minimum in hand. Carry forward. With that, we have to proceed for the next year commitment of 1,000. Our guidance would be around 1,707. Our guidance for the next financial 26, 27.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Atharva from IndiGrade. Please go ahead.
Hello, am I audible?
Hello. Yeah. Go ahead, sir.
Hi, good morning, sir.
Happy morning.
Congratulations on great set of numbers.
Thank you.
Just couple of questions, sir. One, we saw recently that you have done a fundraising of around 115 crores. Can you help us broadly understand what is the rationale for usage of funds? And is there any merit in evaluating having some leverage on the company that can help improve return matrices for the company rather than raising equity?
So just to give you brief, like in our business model, every 100 crores revenue, we need to have a working capital of 20 to 25 crores minimum to cater the 100 crore revenue of the business. In our business model, EPC, industrial or manufacturing sector construction, with that, when we are aiming to achieve our guidance of 1,000, we need to have at least 200 to 250 crore working capital to cater to ensure the revenue of planned 1,000 plus.
Okay, understood, sir. And on customer concentration mix, sir, do we have any path forward? Because we see that top one or two customer order wins and revenues are contributing significantly to the overall revenue.
I'm sorry? Sorry, sir?
Sir, I was asking, sir, basically your top one or two customer, basically Reliance and Ceylon Beverages, they contribute significantly to your recent order wins. So how do we plan to diversify in terms of customer mix?
Sir, actually, just to give you brief, as of now, as a company, we executed 3 international companies in India, and we are now pitching with all the big group of companies, including Toyota and all the other multinational companies, as we have mentioned, Humfu, Taiwan-based company, then Pouch and another Taiwan-based company, Dean Shoes, another Taiwan-based company, even Winfast now they are going for a phase 2. And as of now, our in total books of clients, including the ongoing, around 100 plus is there, and we are working to have our pursuing before 2027. We are aiming to have 303 clients in our books of profile in our brochure. So in with that business model, and we do have direct contacts with all the various advertisement channels wherein we give advertisement airport of entire Tamil Nadu, all the airports, and as well as Pune, and now pitching with Odisha and all the other states also. So we are pretty confident in now taking our business across India and also outside India now.
Understood, sir. Just one last
to sum
question.
Up, we are executed Godrej, and our list of clients are, as we have mentioned in one of the other investors meeting, that apart from multinational companies, we executed all the reputed companies in India, namely Godrej Group and Reliance. Reliance itself, there are 2 verticals. One is multimodal logistics park, where they do large warehousing park across India. One of the biggest warehouse business in Chennai, Maped, they are now executing 200 plus acres of land, and similarly they do have plants across India in 6 to 7 locations. Same way, even Campa Cola, as I mentioned, one of the investments, they have plans to have around 50 manufacturing factories across India. As of now, I think we are now working with Campa Cola 5th facility in Kurnool, and prior to that we had successfully completed Mysore in 8 months tenure, and Varanasi plant 1 in 135 days and plant 2 in 125 days. Now that again they are coming up with another phased manner, and across India, Campa Cola is also now flourishing. Prior to that, in 2019, we have successfully completed PepsiCo project. The point here is that as a company, as we have well demonstrated, well established in terms of design, all the approvals in place, and then executing turnkey project, which includes civil, PEB, MEP, utilities, interiors, and turnkey project completion to honor on time for their facility to up and run. That's what the sense of the company successfully booked. And we to answer the question, we are not restricted to or limited to only Reliance, and we are Reliance and all now last 2 years, and previously we have been executing various corporate companies across India.
Understood, sir. Just one last question. Are we seeing any pressure on margins or any commodity-related cost inflation, or do we expect that the recent order wins and going forward we'll be able to maintain the 15% EBITDA and 11% PAT margin?
Yeah, sir, as such, as we have planned to the preferential when we proceeded, we had a plan. We have decided to have a 4-line PEB manufacturing facility on Sathlokhar ENC Global Limited on own, wherein at this juncture, even as I mentioned, Kurnool Campacola project, 13.75 lakh square foot in from August we have signed up. From September to March, when we are going to complete that project, it's going to be, according to me, again I'm underlining, according to me, 13.75 lakh square foot built up for a manufacturing facility within 180 days. It's going to be a Guinness record if you are really achieve before 31st March 2023. We are on the phase of completing and achieving the target set by Reliance Campacola Group. With that, the point here is that especially in Campacola, a particular project is 12,000 metric ton PEB, wherein we have outsourced all the top-notch companies now, back-to-back with the materials and labors, and some of them with the materials. And now almost 5 factories are working to honor our commitment. The point here is that when we have own manufacturing facility, our bottom line will go up. In our business model, for example, 1,000 crore total, 35% portion of project PEB, business comes from PEB. So if you have own PEB facility, our bottom line may scale up from 1 to 1.5% on the bottom line. Furthermore, in the net profit.
Understood, sir. Thank you so much.
Thank you. The next question is from the line of Guru from Mitigata. Please go ahead.
Yeah, hi.
Hello.
I'm audible?
Yeah, very much, sir. Go ahead, sir.
Okay. Yeah, thank you so much. It's a wonderful result. I have one question. If you all see the news, the Google AI data center investment in Andhra. Are we planning, are we bidding any plan for data centers also in upcoming?
Sir, at this juncture, we are working with the government of Tamil Nadu to construct a higher facility at Oragadam. As of now, we are constructing a data center building under construction by Sathlokhar at Chennai, Oragadam.
Okay, good. With respect to the Google investment and what Adani tie-up, any plan or future with like even Ambani, like the Reliance also planning for the data centers across multiple locations, Gujarat and all. Are you planning or any plan?
Yeah, we are in touch with the Adani group of companies, and we are also in touch with all the Reliance group of construction segments, not only restricted to only beverage and multi-model logistics, but we are centralized contract team is in touch with us. So we'll be getting the bidding opportunity for all the other verticals also, sir. As a construction company, as EPC turnkey construction company, we do have eligibility and we have pre-qualification to bid, and then we will be successful, sir.
Thank you so much. One last question. The one building you are constructing in Chamarajanagar, it is just 2 kilometers away from my native. I used to visit every time, like when I get time, when I go to my native. It's good.
Thank you.
Thank you.
Yeah, thank you so much. In fact, one of the interview, Mr. Muthia Mulide has given a video note stating that it's a world-class facility. As a owner, as a promoter of Mr. Chairman of Ceylon Beverage Group, he mentioned in the video, he himself vouched that it's a world-class facility built by Sathlokhar.
Yeah. Even my brother also.
Yeah, and he was happy that. Yeah. Thank you so much, sir.
Thank you. The next question is from the line of Tejas, an individual investor. Please go ahead.
Hello, Mr. Tyagi. How are you?
I'm fine, boss. How about you?
I'm good, sir. Good to talk to you again.
Yes, sir.
I your business, your business details, everything you have already disclosed. So my questions are not related to business so much. It's just that just to take from the previous conversation that you mentioned, you said that 35% business you're looking at PEB from a PEB part. So,
Yeah.
sir, so in that case, so any reason that why we have not incorporated that PB directly under the subsidiary and we have let the promoters are having a separate company for the PB? Because that doesn't.
Yeah. Sir, I appreciate your question. The question, sir, to answer the question, at this juncture, the facility of Sathlokhar, the land parcel itself, just 1 acre. With that 1 acre, 18,000 built-up area, we are now concentrating and delivering only 300 metric ton to cater Sathlokhar synergies requirement, predominantly as a job order. So, with 1 acre of Sathlokhar industries, we can't do anything, sir. Similarly, what we have done, now we have signed up with 6-7 factories wherein we lease out the buildings and then we are working with them as a job order business manner. Instead of that, we wanted to have one big 4-line factory wherein we can produce at least 3,000 metric ton per month. That's the plan.
Yeah, but sir, will that production facility be again privately owned by the promoters, or will it be coming under Sathlokhar?
No. Sir, we are proceeding with Sathlokhar synergies, sir. Listed company.
Because currently, sir, it is under private limited, right, which is owned by the promoters, if I'm not wrong.
That's what the other promoter company, the small building land parcel itself 1 acre, built up is 80,000 square foot. So we are hardly producing only 300 metric ton per month. That's also for Sathlokhar. So the plan is to have a bigger facility for Sathlokhar listed company, sir.
And that will be a part of the listed company itself and not a promoter company. Is that correct?
Yes, sir. Yes, you are right.
Okay, sir. And you have mentioned the advance given to the suppliers. You said that out of the 80 crores, 40 crores, a part of it was given to suppliers. Sir, can you give a breakup within your top two, your suppliers? Is any of those a part of promoter company either?
Sir, I would like to say Paramount. It's a PEB company where they are producing now for our it's Hyderabad-based company. They are doing 3,000 metric ton per month. Just because we are now executing a project at Kurnool to have a transport cost minimized, so we have given the job to them and they are now working with the Paramount PEB manufacturing company in Hyderabad.
Okay, sir. Sir, and one more question.
And another company is EPAC Prefab Technologies, which all the investors are aware of. That's a PEB company. They are also working with us. They are given some portion of PEB. Others are to EPAC Prefab.
Okay. Sir, one more query was, sir, in one of the conferences previously 3 months ago, you had mentioned that usually you are trying to get advances from your clients for about 60 to 70% to ensure that working capital is getting managed. But if you see the balance sheet, we aren't seeing any advances from the customers. So now is that plan still on, or are we getting any advances from our customers as you had mentioned previously, or we are not getting any advances?
Sir, prior to 23-24, yes, we were executing the project with the client's money, and post IPO, almost all the multinational companies are asking us to give performance bank guarantee and bank guarantee in place to get any advance from the multinational companies strictly nowadays. So because of the all the big companies are now pitching in. So as of now, we had received just 15 crore only from the advance because we don't want to give performance bank guarantee and bank guarantee to get the money. As you know that we have to give margin money and then collateral, everything, lot of cascade. So we wanted to proceed with our materials and then raise the bill and get the payment. That's the kind of formula we are now operating, sir.
Okay, so the advance, getting the advance client which you had mentioned September, that's no longer, we should not take that into account right now. Is that a fair assessment then, sir?
Yes, sir.
Okay. Sir, my last question is, in your, you had mentioned that you also have an in-house design, Archivo Infra, from where you're getting your designing done, which is your, again, a related party.
It's a proprietary company, yeah.
Sorry, sir?
It's a proprietary company, yeah. There are 18 architects are working with that company, yeah.
Yeah, but I believe it is a part of the promoter group, sir, if I'm not wrong.
Yeah, 100% promoter group.
Yeah, so sir, since you have done a lot of designing work, but we haven't seen any transaction on your balance sheet with that, so no payment has been made for it. So is it because the design services are not charged, or is it because they are capitalized, or why is there no monetary transaction between them, sir? If you can help me understand that.
No, no, sir. Actually, RQO Infra Inc. supporting, facilitating to Sathlokhar Synergies order booking right from design, and definitely Sathlokhar Synergies is paying architectural fees to RQO Infra Inc. Sir. That is a proper transaction, sir. It's the reason why we have split it into the architectural firm separately, because engineers and architects may not be considered as equal, and there is a little challenges when we handle their in time, out time, holidays also. We have kept the company right from day one. It's a separate entity. As an architectural firm, it's a little people are highly qualified. They are into a white collar job wherein they execute projects work from home. When we come to site work, and we can't keep the people from work from home for engineers. So that's the reason right from day one we split this operations and business model, design company separately to execute, as well as even project management also from the RQ Infra, and job order executed for Sathlokhar Industries, where we execute only max 300 ton per month from that facility. And Sathlokhar Synergies is a big elephant wherein it is being supported by the other two small companies, sir.
No, I get the working dynamics, sir. All I'm seeing in your annual reports, sir, there is no amount disclosed what you're paying Archivo Infra, sir, for the services. That was the only submission, sir.
No, it is not. No, I think it has been mentioned, sir. RQ and Fry. No, I think our company secretary also with me now, and they said they already disclosed. Yeah.
Sir, good afternoon, sir. Sir, we have shown 3.1 crore for RQO.
RQ and Fry, yeah.
For these 6 months, from April to September.
Yeah, these 6 months, right? So I was looking. I'm only looking at the annual report because that is where we had the last clarification. So if you're giving this year, then okay, maybe it will be showing going forward then.
You are asking for me previous financial year.
I'm asking FY25, sir. Yes, that's correct. FY25.
No, September 25. It is there, sir. It is been March 25. You are asking March 25 or September 25, sir?
No, sir. March 25. Because that is the annual report that we have.
No, sir. Maybe they would have. I mean, the jobs are executed and bill raised only post tenure. Yeah.
Okay, fair enough. Sir, and one last request. When you since your order book, if you can start deducting your amount that has already been billed, it will be helpful, sir, on the order book. Right now, you can combine.
1367 less.
I know, so that is 1117 is your order book right now,
okay.
As of now. But I'm just saying that since you are giving such detailed order book, submissions, it will be better if you can remove the one which has already been done. So just helps us little more clarity, sir. That's all. And sir, congratulations to you and your team for the performance, and keep going, sir. Thank you.
Thank you, sir. Thank you so much.
A reminder to all the participants that please restrict yourself to 2 questions. A reminder to all the participants that please restrict yourself to 2 questions. The next question is from the line of Abhishek, an individual investor. Please go ahead.
Hello.
Yeah. Happy day, yes, sir. Go ahead, sir.
Happy morning, sir. First
Happy
of
morning.
all, congratulations and the best wishes for this and the upcoming financial years.
Thank you, sir.
So I just have 2 questions, sir. So I see that you have a lot of order book and the bids in the pipeline. So and you're coming to say that there'll be around 1,000 crores of turnover for the financial year 26 and around 1,700 crores of turnover for the financial year 27, if I'm right.
You are right, sir.
Correct. Okay. I just want to know if this expectation is on a conservative basis or this is the maximum amount of turnover which we are expecting in these financial years, sir.
Sir, we would like to say that conservatively 1,000 for this financial year, sir.
Okay. So this is what we are expecting, but there is also a possibility that it can exceed or we can meet the target as which you have told in this call.
Our guidance is 1,000 plus, sir. We would like to stand on that, sir.
Okay, sir. Okay, understood.
Yes.
Thank you, sir.
Yes.
And I have one more question, and that we are doing the preferential allotment right now. So, and how about the future prospects of the company, sir? Are we going to move into the main board category, or how is it being planned, sir?
Yes, sir. Right now itself we are in the process now, sir. Like since we are now exceeding 25 crore paid up capital, the moment we are proceeding with preferential, we become main board compliance.
Okay. Understood, sir. I think other part of my questions are very well answered by you in the earlier questions raised by other shareholders. So thank you, sir. Wishing you the best and looking forward to the other things. Okay.
Thanks a lot, sir.
Thank you so much.
Thank you. The next question is from the line of S. Akhilesh, an individual investor. Please go ahead.
Hi, sir. Good morning, Tyagi, sir.
Hello. Happy morning, sir.
Hi, sir. I want to understand the full process from the receiving a customer order to delivering the material, and how does the company manage this, etc. like that.
There are two ways of in our business model. We book tender based. The other one is EPC based. EPC is when we get a call from the client, we will be pitching in to understand their land parcel and then project requirement. Based on that, our design team, RQ Infra team will prepare the complete set of all the design-based requirements, architectural plan, and then conceiving the entire requirement of proposed factory building or whatever, that it be institutional or a hotel, hospital, anything and everything. Our design team will prepare the complete set of drawings, and then 2D, 3D view, walkthrough, everything will be given, and then upon confirmation from the client, we will hand over the entire designs to contract department to prepare the complete techno-commercial detail, which includes specification, makes up component, costing, and then project schedule with the payment terms. So based on that, we submit to the client. Upon submitting, the client will take one or two quotations, or some of them even with one quotation they will have with the confidence, and they will negotiate place the order. Upon receipt of the order, we will be proceeding for the first 3 months to prepare the complete detailed good for construction drawings. Parallelly, we get all the approvals in place, which includes environmental clearance approvals, pollution control approval, building plan approval, fire approval, all the NOCs and approvals in place, wherein we start the commencement of construction on 4th month. From 4th month up to 9th month, entire building will be complete. To sum up, our design and build model, including approvals, will take 3 plus 9 months, meaning for the first 3 months for complete detailed drawings and approvals, and the 9 months to execute turnkey, including the machines up and run to put with the electrical power all the approval and state run for the commencement of construction, commencement of operations. This is the EPC model of Sathlokhar business proposal. The other one is tender based. For example, Godrej have given opportunity to execute tender base, wherein we have bidded only. The Godrej itself, there is a business policy that they don't want to give the entire package, entire turnkey to one contractor, meaning they would like to split civil separately, PEB separately, MEP separately, but they will not give all the opportunities to one contractor. They don't want one of the client, they wanted a one bucket to one-stop solution for entire project. The other companies different policies that they don't want to give everything to one contractor, get stuck in their mindset. So with that model, we bid the business and we get the opportunity. The moment the project is awarded, we will be performing an auspicious day commencement of Puja with the groundbreaking. From there, first 45 days to execute up to plinth beam level, and exactly 60 to 75th day onwards, the PEB erection starts place. The first portion of building would be happening 15% up to plinth beam level, and then 15 plus 30% would be built upon construction of PEB assembled at the site. From there, another 15% would be built upon roof completion, and balance 15% would be completed upon floor completion. Then the rest of the percentage would be completed when we complete the entire external works, which includes drainage, roads, all the utilities, including facilitating electrical, transformer, generator, boiler. All the packages has to be furnished, because as a civil contractor, the fate of civil contractor, first in, last out. That's how any civil contracting company when we begin with the business.
Yes, sir. I understand clearly. And are you seeing any competition from the big players like this?
Yeah, we do have, sir. As I mentioned, there are client to client, there are two differences. Some of the clients, they have business policy. Even in our company also, when we place any PO to any vendor, we would be getting 3 quotations from a typical supplier. So then they negotiate. Similarly, all the clients are also taking our specification, our codes, they will be tendering without cost, they will be getting the quotation, then we may get the opportunity to become successful, because price is always political. So when it comes to business, they will give weightage to the design company, where our own team have been involved in conceiving the conceptual plan, from then detailed drawing. Everything is being supported, rendered by Sathlokhar. That's an added advantage for any clients when they come to Sathlokhar.
Yes, sir. And what is the current workforce, and what are you targeting in the financial 27 to increase the workforce?
Sir, prior to IPO, our total strength of the company, company-owned employees around 137 was there. And from there, now we have 580 plus owned employees. Within 15 months, we scaled up from 150 plus to almost before 600 now. I mean, close to around 600 now. But when it comes to labor, 1,350 laborers was there before to IPO. Now that almost 4,000 laborers are working with all the sites. So it's easy for us to scale up, because myself, I have 30 years of construction experience since 1995, and 14 plus years of experience as an employee with the various corporate companies. As I mentioned, I was earlier working prior to my business. Our business, I was earlier working for a group of companies called Hyatt. As class, I was a general manager Hyatt, and Volta Tata group of employee, and Kemin US-based company employee, and Bannariaman group of employee, and Volta Soft Gelatin Tablets, Agra Leatherboard Private Limited, various corporate intimate fashions, Mass Holdings group of companies, Sri Lanka. So we served various. So the message here is that, as promoted, myself, my wife, and all the employees are having 30 plus years of rich experience in construction. So with that, with our experience, with our contacts, all the peers, employees, and sub peers, and seniors, junior, all are our company employees today, to look after all the verticals, starting from administration, HR, procurement, contract department, even accounts, and execution, operation, electricals, solar, PEB, all the verticals. Most of the employees are ex-employees. My wife's ex-employees, and our other senior colleagues, promoted key employees, ex-employees, are working with our company. That's the reason we are peacefully running the business with the confidence level that our sites are being taken care with a solid capable land to look after the business to complete the project on time.
Thank you, sir. Are you seeing any workers shortage like that? Because competition is increasing in the industry. Workers shortage in this industry?
Sir, in our business models, we are not executing multi-storage building, wherein each building itself we should deploy 1,000 plus laborers. In our business model, 30% civil, 35% PEB, and balance 35% other disciplines like trades like electrical, mechanical, plumbing, firefighting, data, voice, boiler, air conditioning. All are trades wherein minimum qualification diploma or minimum ITA, diploma, BE, and ME, all the players are required for 35%. When it comes to PEB, complete mechanical and wiring structural. The 30% comes under civil. So with the blessings of God, as I mentioned, 30 years of rich experience, almost we are able to capable of increasing even 15,000 laborers within max 30 to 45 days, because we scaled up and we do have a context, and almost, as I mentioned, 30 years including ex-employees experience and the employees experience and our own business experience. We have got good contacts across India, and in our business model, we don't see any challenge, because we are not dependent on fully labor related multi-storage building. We are working with the manufacturing sector, wherein the manufacturing sector not only restricted to beverage or auto components or car manufacturing built and beverage consumer. So name it any sector, manufacturing sector, we are pretty strong in construction of design and build, manufacturing sector, building construction as a turnkey solution provider, not only restricted to any. It's manufacturing building is a broad open, wherein it can be auto or poly or even PVC or anything and everything, length, breadth, width, and that's what the requirement of any manufacturing construction. We are pretty strong in those activities, and predominantly our job role is to have starting from soil test, then foundation, footings and columns, and PEB erection. You know, PEB assembly is as equal to a computer table assembled at your home when you purchase in older days. Same way, we brought the entire PEB is being fabricated outside and just brought to site, assemble it in 30 to 45 days time. The entire skeleton is up and run.
Okay, thank you, sir. Thank you for your detailed answer. This is my last question. Thank you.
Thank you, sir.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. A reminder to all the participants. Please restrict yourself to 2 questions. The next question is from the line of Sunil Kateshipia from Tanush Investments. Please go ahead.
Happy day, Mr.
Sir, happy morning, sir. Sir, congratulations for a great set of numbers. Really, you have achieved what you have committed last call. Thank you very much.
Thank you.
Sir, I have one question just to understand. See, we are outsourcing PEB manufacturing work right now because we don't have that facility in a larger scale, right?
Yes, sir.
So, and as you mentioned that we are going to have the PEB manufacturing facility in future. So, 3 questions related to the same. What is the percentage of our contract we are outsourcing to PEB companies? Number 1. What will be the time when we will have PEB manufacturing facility at our in-house? At what period we will have in, and what will be the capacity of that?
Sir, very good question. At this juncture, I would like to take one particular site as an example. Karnool project, Reliance Campacoda, around, as I mentioned, 12,000 metric ton PEB is there. Out of 12,000, only 2,000 we are producing from Chennai, and rest of the 10,000 we are taking it from Andhra itself, from various other PEB partners, namely Paramount, as I mentioned, the other Bima PEB companies, and the other group of companies are supporting. The point here is that at this juncture, we have got one sister concern. Owned sister concern is having capability of 300 metric ton alone. Per month we can max. So we depend on 90% from other customers, sir, other PEB manufacturers.
Sir, my question was not that how much we are outsourcing. I'm saying is that out of the total contract which we receive from the client, what is the percentage of the value we have to outsource? Percentage of value. For example, we got 100 crore business from X company. Then how much percentage we are outsourcing for PEB company? That's what the question.
Sir, around 450 crore worth of PEB. As I mentioned, I think I already answered one of the other questions you asked. 35% of the business from PEB.
Okay, understood.
450 crore. Yeah.
Okay, sir. And the new facility when is going to start, and what will be the capacity there?
Sir, we have planned in a phased manner to have a 4-line manufacturing facility. Hopefully, if everything goes well, when we get the preferential funds, by 30th August, we'll be inaugurating at least 1 or 2 lines to begin, and then subsequently, before end of 26 financial year, we will have an entire 4-line manufacturing facility with us.
Okay, that's great. And last question is that after having this PEB facility at in-house, will there be a margin growth in our EBITDA?
Yes, sir. As I mentioned again, 1 to 1.5% expected margin will go up from the bottom line.
Okay, that's all from my end, sir. Thank you very much and congratulations. And best of luck.
Thank you so much.
Future.
Thank you. The next question is from the line of Prit Shah, an individual investor. Please go ahead.
Hello. Good morning, sir.
Hello. Happy morning, sir. Yeah, go ahead, sir.
Sir, first of all, sorry if I'm asking this question. I have joined late. So the question is, sir, what is the current order book and what are you expecting by H2? Means what will be the order book of our company by H2?
Sir, the total order book value is 1367.61 crore. Out of the 250 already completed in H1, and balance 1,117.5 balance is there, and S2 is expected 750. So our guidance for the financial year is around 1,000 plus.
No, sir. My question was, what are you expecting the order book by the end of H2? Means how much order you are expecting?
Yeah, sir, to cater the H1 of 26-27, I expect 1,000 plus. Yeah.
Okay, sir.
Thank you. The next question is from the line of Akshay Shah from Toro Wealth Managers LLP. Please go ahead.
Thank you so much for the opportunity and congratulations for good set of numbers, sir.
Thank you, sir.
I am looking at page 25 on investor presentation where you have mentioned order book and you have mentioned that 84% of order book is from Tamil Nadu. While you are mentioning that currently 40% order is from Tamil Nadu and 40% is Karnataka. So can you explain me this part?
Sir, which page is that? I need to cross check. I will come back to you. Sir, at this juncture, honestly speaking, Andhra, Kurnool itself around 360 plus crore and Vishnu Chemicals Andhra and Apollo Tyres Andhra. Put together, the total order value of these three projects itself.
This is not a percentage, it is actually value.
Sir, it is not a percentage, it's a value, sir.
The presentation.
In the presentation,
87.
I think.
You're referring to page 43.
Page 43, right, sir?
What? Page 25. It is not value. It is
yeah, just a minute, sir.
Hold on, sir. We'll just run through
it. Hello.
Yeah.
So, what is the unexecuted order book as of now? As of 30th September?
Sorry, sir?
What is unexecuted order book as of 13th September? It is around 1,000 crores.
117.5.
This is order book containing the order which is already executed, in current execution. But what is unexecuted order book?
Sir, sir, the total order book is 1367.71. Out of that, 250.21 build and then balance is 1117.5.
Okay, sir.
1117.5 balance is there.
Okay. And sir, as we scale up, when will be able to generate positive cash flow? Because if we want to grow in next year at 1,700 crores, then we will again need a fund, or we will be able to generate it internally.
So once we receive these preferential funds with the internal approach, we'll be proceeding for next financial year requirements.
Okay, sir. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Dinesh from Finsight. Please go ahead.
Hello, sir. Am I audible?
Yeah, very much, sir. Happy day.
Yeah, sir, happy day to you. And really nice, a great set of numbers. And, we expect, you to continue on this same path. My question was slightly, longer term, sir. It's great to know that we'll be growing at, say, 1,000 crores for this financial year and, 1,700 crores is something like your target for next financial year. But do you think really this kind of an exponential growth, how long do you think this will last? Or, it's just for the next, say, 2, 3 years, 4 years, and you'd see a very moderate set of growth henceforth? That's my first question. And the second question, which is related to this, like how much capex we need to do across our facilities to in terms of amount for the next few years to see this kind of a growth? Yeah, this is my related question. Yep.
Sir, actually, I hope you are aware of across India, almost all the states and even districts of all the states also now scaled up not to have complete industrial segment growth in highways, roads, bridges, everywhere there is a big growth is happening across India. I'm pretty confident that in Tamil Nadu itself, another 60 to 70% vacant lands are there. So I just to give an example, the point here is that, and everybody is talking about they are beginning 30 years from China. So I am sure next 15 plus years, for sure India is growing in a different vertical wherein almost all the investors from other globally are interested to be in India, specifically some of them from neighboring state of Tamil Nadu, majority from Tamil Nadu, and some of them from Pune. So across India, now as a company, as Sathlokhar, we have already been witnessed and demonstrated out of Tamil Nadu, and we have been getting lots of tender opportunity to participate across India. So I don't see any challenges for next 1 decade, even 15 years of all the minimum. I'm talking about as of now, my age is 48. According to me, up to 75 years, I'm sure I have long visibility in order to have a big scaled up manner wherein I don't think so. We never ever beat. I mean, we'll touch China growth, but however, we have to at least to know close to China growth. So it's not that big dreams by all our political parties, and I'm sure India is going to grow in a bigger way, sir.
Okay, sir. And what about capex? Like, what kind of a capital expenditure you expect, either from the preferential issue or like for our growth?
The 114, sir. We have mentioned about including warrants put together.
Okay.
No. We have planned only 25 crores for the land cost. Rest of them for working capital.
Okay, fine. That's fair enough. Okay, so something related to the same, sir. Like as you mentioned, there is a huge potential of growth and new orders are coming up. Like I want to understand your strategy or philosophy. Like how do you acquire these projects? Is there any minimum internal IRR or some margins percentages which you look for? Okay, beyond or below this, a number will not take projects or what's the strategy in terms of acquiring new orders?
So, as a company, we have certain limits wherein we'll have. See, some of the inputs we are unable to share because it's a basic fundamental business matters, and the point here is that we will be carefully booking. That's the reason we are very choosy in working with our clients, and as a company having 100 plus various clients in our company's profile, and we have been well treated and respected by all the investors and even the clients, and we are now at par with any other reputed construction company. We have been well treated by the investors and the promoters, and I'm sure we are very choosy in working with our clients, sir. And we will not take all the orders. We will take on what is important, what is really going to be fast track, and we don't bid any project beyond 12 months commitment, sir. Because as a company, we don't want. That's the reason we have strictly stopped not taking the residential segments or gated community projects or multi-story residential projects. Those things are taking time, long lead. That is 2 plus 3 plus years. As a company, we have a well-disciplined way wherein we pick up the projects max 12 months, and beyond 15 months. That too, clients are insisting because when they are looking for a 400 plus acres and they have plans to construct 15 boxes of factories. Wherein they have phased plans, wherein we will be supporting them those projects. But as a company, in all our submission, in all our proceedings, we've never ever been signed up any projects beyond 12 month commitment.
That sounds great, sir. On something related to the same thing, my only question, last thing is, so we can expect the current EBITDA margins to remain in this level, or you think we could see a slight 50 to 100 bips improvement going forward? Is that possible?
Sir, according to me, once when we take a large sizes or when we have own PEB manufacturing facility, definitely our EBITDA and profit PAT would be furthermore scaled up, sir.
Okay, that really sounds great, sir, and thank you and all the very best to you.
Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of the question answer session. I will now like to hand the conference over to Mr. Parth for closing remarks.
Thank you everyone for joining the conference call of Sathlokhar Synergies E&C Global Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the call.
Thanks a lot, sir. Thank you so much.
On the behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thanks a lot, sir. Happy day.